Do you know what time you are likely to blow your account next week? That's on Monday. Do you know what time on Monday? During the New York session. What else happens on Monday during the New York session? Now, from last week Monday throughout to Thursday, I made over $3,000 trading during the New York session and only took one loss. Notice I said Monday to Thursday. What happened on Friday? We closed off the market with $600 on a single trade on US30. That was 3 trades, each having a 200 pip move. And the most interesting part about this is I did not do this alone. With over 120 people in the inner circle, we obliterated the market. Now listen, you have to watch this video. The weekly analysis from last week, you could have replicated exactly the same trades that we all had. But that's all gone. It's in the past, and I'm back again with another weekly analysis. How you guys doing? I'm doing absolutely lovely. If you're new to the channel, welcome. We trade the Nasdaq over here. If you're returning, welcome back. You already know what's up. Don't forget to hit the like button, turn on your post notifications, and subscribe to the channel, because when I hit 20,000 subscribers, I'm going to be doing a little giveaway. Now, right onto the charts. Now, that was a great ride on US30 to the upside, as you can clearly see right over here, and US30 has indeed gone back to retest the highs. Remember, in the free signal group, if you're not in it, the link is in the description below. I posed the question that can we break the highs or can we retest the highs on the Dow Jones once again, and we have absolutely created new highs. As you can see, the market closed off with a new high. Now, timing when you're trading is absolutely important, right? You could have caught the movement right at the zone as a sniper entry, while I caught it as soon as I saw the buyers stepping into the market, and we rode the momentum. And then we have someone who would have tried to trade the breakout, and the market could have closed off with them at break even or probably in drawdown. So how do you time these entries? How do you get perfect entries like this? You want to trade as soon as you see the momentum that's in the favor of your setup. Now, the fun fact is I was not initially trying to enter this trade at this spot. I had buying limits set out for the whole inner circle at around about this spot right over here. So I thought that the market would still want to drop. You know, I think it was around about this spot, right? So I thought that the market would want to probably drop and fake out because of all of these levels. It would want to keep dropping and going to the level. But I was closely monitoring what the market was doing. That brings us to the question, how well do you know your price action? We had the sellers on US30 dropping the market from around this spot. Well, at least here they were having a little breathing space where it dropped and then the buyer step in, they dropped, the buyer step in. Here they literally just dropped the market with 2 full 15-minute candlesticks. You can clearly see it. 1, 2. Then at this point, I already know that the sellers are absolutely in control of this market. No matter if the price is at a very good point of interest, I do not want to enter into a buying position before I see the buyers stepping in. So at this point, I was waiting for the market to probably push. Because of the momentum, I thought it would keep dropping to around about this spot where I had my buying limit, and I thought it wanted to create another support level. So we would have a support at this spot and then a resistance right above it. Now look, the market would never move the way I want it to. It's always going to move the way it wants to move. Instead of, yes, missing the trade is one of an option, or adjusting my entry points as soon as I see buying momentum stepping into this market. I had to keep checking between my 5-minute time frame and my 15-minute time frame to see if the buyers are going to try and step into this market at any point. So I waited for obviously this 15-minute candlestick to close, and then I dropped onto my 5-minute time frame. You can clearly see what's happening on the 5-minute time frame at this spot right over here. So we had the 15-minute candle closing like this, and then the next 5-minute candle opened as an indecision candle. If you don't know these candlesticks, the Japanese Candlestick Bible would be one book you really want to read. Now, after I saw that indecision candle, it came to my mind that we might not go to my buying limit. I waited for another 5 minutes. I saw another bullish candlestick stepping into this market. I immediately knew that the sellers have lost momentum at this spot, and there might be a reversal, and I would want to catch the movement if there is. Now, to show you that I'm not just picking things out of my head, you can clearly see that in the inner circle, I had dropped this setup as a limit by US30 at 43,000. Then this was at 3 p.m. So when I now saw the movement stepping in at around 5:30 p.m., Almost around about the NYSE session opens, I then told them, let's enter a few positions now, because it's either we're going to miss the trade or we're going to enter and try and ride the movement. And as you saw at the beginning of the video, the trade played out really well right over here, and we ended up having to delete our limit because we don't like holding trades over the weekend. So now that's simply what I am saying. Timing in trading is absolutely important. You will miss a very good movement simply because you're waiting for the price to do what you want to see it do instead of reading what the candlesticks are doing. What are we expecting US30 to actually do in the new week? Now you have to understand that these charts are mostly moved by fundamental analysis more than they're moved by technical analysis. So we're going to go over here to check if we have any news events for this. We always want to look at things like the initial job claims, the GDP growth. We want to look at the Fed cutting rates. We want to look at PMI, numbers. We want to look at all of these things that we're seeing, and we have that on Wednesday, Thursday, and obviously on Friday, and mostly it's around about the time that we want to trade. This is good for us because we're going to see more volatility in the market, and I'm always saying that you want to trade when there is volatility in the market, right? So if we go over 2 hour, 1 hour, or 4 hour time frame, we can clearly see that on the 1 hour time frame, US30 is creating a healthy trend. We have a low that it created, and then a higher high, right, and then a higher low, another higher high, a higher low, right, another higher high. So this low right over here should be respected. We want to see another higher high if it's going to continue with its trend. And I did give these levels when we were trading on Wednesday. You can see we had a build up at this level right over here, and the market broke right throughout, to continue with its movement to the upside, right? So that's basically what I want to see again on US30. I want to see it breaking out of the highs, right, and then continuing with the movement to the upside, right? But it's not just as simple. Remember, timing is important. Where do you want to actually buy when the market is ready? You're going to start off by deleting all of these lines because we do need them, but let's draw them all afresh. So the first buying point is obviously, as usual, when we break out of the highs. If it fails to break out, then it might reject to go and find another breathing space at one point or another. We can pull out a trend line at the spot right over here, right? So we want to buy as it breaks out. The only thing I don't like about buying the highs is we really don't know when to take profit, right? So a lot of traders are struggling with that concept of buying the highs, right? We don't know when to go out of the market, and they want to risk a lot, and the market normally breaks out, retests a little bit, and then goes up. So here is only if you understand what you're doing with these breakouts. If it breaks out, it will be a good chance for you to actually go and buy. And then obviously want this next level right over here, and then we would have this level right over here. So if it breaks out of this level, it would probably come and play around in this zone and then pushes up to the top, but this could be a little weak zone, right? So we'd want to mark up this one at this spot right over here. So we were having the market ranging at this level, broke out, and then came back down to retest it. So it might come back to this level. Want to look for buying positions at this level. Absolutely simple. You can see the next zone, we do the exact same thing. Now, like I always say, we want the market to break out of at least 2 support levels for us to still be looking for buying positions. If it now wants to go and break the third one right over here, if it breaks the second one, right? 1, 2, that's acceptable. If it comes to this level, there's a high chance that it would want to break out of this level, because remember, this movement from the top, right, to this level right over here, this is no longer an uptrend movement. This is no longer the healthy trend that I've been talking about. If the market drops from this level to this level, there's a high chance that the sellers have stepped into this market. So you don't really want to be looking for buying positions unless it forms something else, and then want to trade the breakouts, and then this now turns into a little ranging market. So it's not about just drawing horizontal lines. You have to understand what the market is doing when you have the lines on your chart. That's it, done for US30. Let's go over and check out gold, right? We're going to start by deleting every single thing, and let's check out what gold has in store. Gold has been rallying up to the top, right? Look at this movement. So this is what gold did for the whole week. I did not trade gold, not even a single day, because look at how the movement looks. It looks absolutely, look at this. What kind of movement is this? I can't even call this a healthy trend. Well, it could be a healthy trend because we have a low, we have a higher low, higher low, higher low, higher low, and the market is just pushing up to the top like that, right? So that's what's happening on gold. But just like I said, you don't know when to actually stop trading this market if you want to go and buy the highs, right? So you would probably want to mark up your zones first instead of using a trend line, because it actually doesn't make so much sense if I draw a trend line, right? So let's see, the highest point that it got to was this point right over here, and then it broke out of the highs with this candle. Look at how nice this candlestick looks. So we're having a little build up at the spot, and then the market just broke out of it. Gold would probably be nice to trade, also including this level right over here, right? If you want to buy this market, it's either you want to buy it as it comes into this zone with a really tight stop loss, because it might want to go back and retest these levels right over here. So just exactly as I explained on US30, these are the levels we'd be looking at if we actually want to trade gold. We have our stop loss at these levels for the first trial after we buy in this level, right? Or if it drops to this level, oof, I don't really like this level because it might break out of it. Look at it. It looks like money would be resting at this spot if the market comes to the spot, right? You can see it, right? We have 1 2 3 4 5. Now it looks like it would probably break, but it's not like a bad position, right? It could be worth trying. So this will be our first trial right over here. If it breaks out, we'll try again at this spot. But if it breaks out of this, then you really want to be careful, because nothing would stop this market from dropping. You see, we don't have any candlestick that can stop this market from falling right down to the bottom, right? And then remember, this whole analysis is just for a short-term movement, because we are on the 15-minute time frame. On the larger time frame, there is absolutely no setup. Look at how the market looks. You cannot have a setup when the market looks like this, right? So that's basically it on gold. Now right over to our Nasdaq, right? We closed off with a decent move. I mean, 0.5, not bad on the Nasdaq. We're going to start over on our daily time frame. Let's see what we're having on our daily time frame on Nasdaq. Now remember, on Monday we were trading at these levels, I think, right? And then we were targeting this zone. Well, at first this zone, which was hit on Monday, you can see the movement. It moved up to the top and just obliterated our take profit right through on Monday, right? So that level was broken out of. It has been disrespected. So we're looking at this level again. You can clearly see that at this spot, right, the market just tapped on that spot, and then the sellers stepped right into the market, right? So like I had explained on US30, we can clearly see our candlesticks right over here. We had the market pushing up to the top, the sellers stepping into the market, dropping the market to this level, but could not continue with the movement. You can see the little indecision candle, and then we see the buyers stepping into the market, right? But we can see the candles that the buyers are stepping in with, they're not so strong. They're not as, as strong the candlesticks we would want to see, the buyers having, for them to be able to actually break these levels, right? So just by looking at the candlesticks, it's very obvious that the institutions have been dominating this market on Nasdaq. You can clearly see that they have been just giving us all of these big movements, and they are currently in control of this market, right? So just like I always say, we want to trade alongside those institutional players, right? Know that we are targeting the highs right over here above this level, right? If the market eventually then breaks to the upside, we are having the exact same setup like on US30, where we mark up this level, we also mark up this level right over here. There's a high chance that this level though would be broken a lot faster, because you can see how much money is resting at these levels. We have a lot of weeks, the market waking up and faking a breakout. So if it does come to this level, we want to be careful for that one, right? So we would probably not consider this as the first one, and then consider this as the first one, and then the second one being this one, where we want to buy if the market comes to this level. This would be a really good point of interest if the market then eventually drops. But if it breaks out of here, just like I said, the sellers would have stepped into this market, and you don't really want to find yourself looking for buying positions until you see something different, right? And then obviously if it then breaks out of this level, we'll now be targeting our little zone that we had on the daily time frame, which would look something like this. So we would want to see the market breaking out of this level. Now remember, these are not the all-time highs, so really we can buy the breakout, because we already know that it will be targeting the next level, just as it did last week Monday. But all the setups are actually as clear as day. We're going to have an absolutely beautiful week, and if you did enjoy this video, don't forget to hit the like button, turn on your post notifications, and subscribe to the channel. Before me with that is Bintino, and I'll see you in the next lit video. Peace.